Good afternoon, everyone. This is Jack Verdul with FX Capital Online. In this video, you will learn exactly how to find trend breakout on any pair. We will be using Traders Way platform to analyze our chart and also understand exactly what is going on in the Forex market. As you can see here, I have GBP USD chart open on the monthly time frame. First and foremost, to find trend breakouts, you have to know the highest point and the lowest point of the market. This is the highest point of the market on the monthly time frame. And this is the lowest point of the market on the monthly time frame. Right now, as you could see, we had a major sell that started here, and ever since then, we have been on a downtrend. Now, since this is a downtrend on the monthly time frame, to find a trend reversal on the monthly time frame, it will take a long time to happen. And once it happens, we'll definitely see some bullish momentum heading back towards this way, upwards. But this is the highest time frame that we could see. So it's not very wise to just base our analysis just off this time frame. Let's go down to the weekly time frame to see exactly what is going on. Right now, we could see on the weekly time frame, this was the last highest point the market reached on the weekly time frame. So let's place that line and also color code. Here on the daily time frame, you can see price sold from the M formation at the top, sold all the way to about right here. Zoomed in, we could see price is now starting to reverse a little bit to go back on the uptrend. But right now, price is currently on a downtrend. Let's go ahead and place our trend line. I always advise all my students to place the trend line on a time frame that can see it clearly and be able to make a decision based on that trend line. Because if you put a trend line on the monthly time frame, it's not going to affect you when you are going to place a trade, because you will not be able to see that trend line. So here on the H4 time frame, daily time frame, I can actually see that trend line, and it's currently where I'm trading. Because if I did my trend line from here, yes, this is a trend line, but it's too far. So I'd rather just start from the H4 daily time frame and H4 time frame. So as you can see, this is the daily H4. Now I'm zoomed in. As you can see right now, price is currently buying. Once price reach trend line here at the top, it's either going to break it or reverse. If it breaks that trend line, then we possibly have a trend reversal. If it goes here at the top in reverse, then most likely price will continue going on a downtrend to find the next support zone. Here on the H1 time frame, we could see what is happening. Price did not fully reach that resistance yet, but it will. On the H4 time frame, I can also place another trend line right underneath to create a channel. this channel will help me identify exactly where the zones are, where price is currently playing. Right now, just on the H4 time frame, this is the zone from here to here. This is the zone. This is the channel. Right now, price can only go up and down within this zone. As you can see, price came from the support trend line underneath, consolidating on a buy, going towards this resistant trend line. When price does reach this resistant trend line, it has a major decision to make. Either price will break out on that time frame, H4 time frame, and continue the buy long term and reverse the trend overall, or price will only test resistance zone and continue going back down on a sell. So most important key point, to find a breakout, you have to place your channel. Your channel is what's going to tell you what zone you are in. And it's also going to tell you whether or not price is going to continue or break out. As you could see, price started playing around this in between this channel. Once price reached here, it did not break and continue going down. It reversed to test the top again. Once it tests here again, it's either going to break it or reverse. But once it does reach it, we will know exactly either if we want to put a buy position for the break, or we're going to put a sell position for a sell to head towards the next support zone. Once you find out your channel, it's very, very easy for you to find your entry. If you are looking for a buy, this was your buy position, your perfect buy position. If you missed this perfect buy, you had another opportunity right here. And now this would be the next opportunity for you to place a trade, either for a buy or a sell. Once price reach there, you simply have to watch it to see where it's going to break. Once you notice where the break is going to happen, all you have to do is choose your risk and place your trade, and you will be in profit or with a loss. But 9 times out of 10, if you are trading based on knowledge, if you put yourself here or a buy here, you have very, very little risk because you are selling or buying at a key zone in the Forex market. So once price does reach here, we will know exactly if we're going for a buy or we're going for a sell. That's all for this video. Refer to the next video to learn exactly how to use indicators to give you more insurance on your position. Either price will go your direction or not. See you in the next video. Hello, this is Jack Verdot with FX Capital Online. In this video, we are going to learn about indicators. There are 2 types of indicators, leading and lagging indicators. Leading tells you the future, lagging tells you the past. We are going to use one of the most common indicators in the Forex industry, which is moving average. We are going to add two moving averages, one going to be leading and one going to be lagging. For the leading indicator, we are going to change the settings to 50. Change the color to a light blue. For the lagging indicator, we are going to change the settings to 200 and color coded white. The leading indicators come first, which is the moving average 50, and the lagging indicator comes second, which is the moving average 200. We are also going to add the stochastic right in there. Let's go over the moving averages first. The moving averages are simply support and resistance zone in the market that moves with the trade. So for example, here, we could see that we had bullish candles right above the 200 moving average. Price broke and started moving right above the 50 moving average. We also could notice the moving averages are holding the trades together on a perfect trend. Looking at the lagging indicator here from the 200, we had entries for a buy. Once price broke the 50 moving averages and fall above, we had a second entry for a buy. The reason we have entries for buy, the moving averages are representing support and resistance zone. In this case, the moving average represented as a major support zone, which caused price to move upward on a bullish momentum. The moving averages shows an all time frame. Let's take a look at the daily time frame. Here on the daily time frame, we notice that we had bullish candles forming above the 50 moving average. To represent as a support zone, price stayed above that moving average 50. And now we have a bullish momentum heading on up towards the 200 moving average right above. Once price reached that moving average, the 200 either would represent as a resistance zone, or price may break it and fall above to represent as a support zone. Let's take a look at the smaller time frame as well. Here on the smaller time frame, we can see clearer how the moving averages are represented as moving support and resistance zone. We could see here we had bullish candles falling above both moving average 50 and 200, plus they cross. From there, we have bullish momentum. 50 moving averages representing as a support, and prices moving on upwards on a bullish momentum. Here we notice candles are falling right below that moving average. Therefore, that moving average 50 represented as a resistance zone at that moment. Therefore, price sold towards the 200 moving average to represent as a support. From there, we could see bullish momentum again happening here. Price tested support again, both 50 and the 200 moving averages. We have bullish momentum going on upwards again. Now we are looking at charts. Here we notice that price is now falling underneath the 50 moving average to represent as a resistance zone. And we have the 200 moving averages right below to represent as a support zone, telling me that price may sell towards that 200 support zone and then reverse for a buy long term. Another major indication you could have within the moving averages are when they're crosses. I showed an example earlier where moving average crossed to create that momentum. For example, here we notice that the 50 moving average crossed the 200 moving average, which caused a downtrend bearish momentum here on this particular move. The crossing is an indication that price will continue going that direction long term. Here as well, we notice moving averages crossed again. The 50 moving average crossed the 200 moving averages, representing as a support and resistance zone. And we could see that price is moving on upwards on a bullish momentum, staying within the moving averages after a cross. The moving averages crossing also represent as entry and exit plans. For example, if I were to get in a sell right here at the moving averages cross, my exit plan would be at the next crossing. So down here, at the next crossing, I would have stepped out my sell and getting a buy here. From that buy, I'm looking for the next crossing to step out that trade, which is right here. Well, we have the next moving averages cross to reverse the trend. We also have stochastic indicator that could be used as a great indication for you to be able to buy and sell at the right time. Here on the 4-hour time frame, we are able to see the history of this stochastic. The stochastic is simply an indicator that shows you the range for a particular pair on different time frame. Within the stochastic range, we have the 80, which is the highest point it could reach. And we also have the 25 area, 20 area, around the 40 area here, which is the lowest point price can reach within that time frame. As we could see here, stochastic reached a low on the H4 time frame and price reverse for a buy. The first indication for a buy here that we have is the stochastic at the lowest point reversing for a buy here. After that reversal, the second indication that we have to stay in that trade is once price broke that 50 moving average and started moving above to represent as a new support zone. The next indication we have, we notice price broke the 200 moving averages and fall on top, therefore represent as a support moving average right here. We also have a crossing of moving averages here to indicate that price will be buying long term. Notice here, every time price reach the highest point on the stochastic, we have a movement on the chart. Since we are in an uptrend, the movement up on the stochastic is much bigger than the movement downwards on the sell after it reached the high, due to the trend being a buy trend. As we know, when we are in buy trends, we have higher highs, higher lows, and higher highs. Price reached the highest point of the stochastic and created a higher low. Once price reached the lowest point on the stochastic, it created a higher high. Here we could also notice moving averages crossed. We also have a W formation. Price broke 200 moving averages to represent now as a support. We also notice stochastic is at the lowest point possible, so therefore price had no choice but to go on a buy trend here. We also notice stochastic reached the highest point and price sold as a retracement, but still falling on top of moving averages 50 to represent as that support zone. Once price reached the low point on the stochastic, we had another movement for bullish momentum here. Now price reached the highest point on that stochastic. Therefore, we having some sell momentum happening here. Price have not reached the lowest point on this stochastic just yet. Once it does, it will fall on top of the 50 moving average, which would now represent as a support zone. From there, you could look to buy for a bullish uptrend after price reach that moving average 50, and also after the stochastic have reached the lowest point possible, which is the 25 area for a buy. That's all for indicators. Refer to the next videos for more content.